What's up, guys? Welcome back to another video. Today we're going to be going over a question that I've been asked quite a few times, and it is when you should sell a stock or investment. Now, this is a pretty difficult question to answer just because it depends on what you were invested in and what your investment strategies are. So, if we take a look at the stocks, just Palantir, say you buy in at 25, the stock shoots up to 34, 35. That's a $10 jump. And if you're holding shares, you have made a lot of money. Or if you have call options, you definitely made a ton of money from this run up. So you don't know what the stock is going to do from here. Obviously, we can see it did shoot up more, but while you're at this point, you do not know what the stock is going to do. So, if you are holding shares and it is a long-term investment, definitely hold the stock for the long term. That's your goal. It's to buy and hold. And if you hold shares, it is a pretty safe investment to hold for the long term because generally, in the long run, stocks mostly go up. There are some dips, but they always recover as long as it's a solid company generating positive revenue. So say you're holding an options contract, a call option set for say 1 month out. If you see a run up like this, you definitely want to take profits on that option. You don't want to lose the profits that you've gained. Call options are leveraged investments, and a $10 movement up like this, which is around 30% in stock price, you are definitely up around maybe 200, 300% on your call options. So you can definitely take profits there. Don't get greedy. Obviously, we see the stock mooned up to $43. And if you had held until there on your call contracts, you would have made some serious money on those options. So another strategy you can do is if you have multiple contracts, such as, for example, let's just make it easy, say you have two call contracts on Palantir, you bought it in at around 26, 25, it shoots up to 34, 35 levels. What you can do is you can sell one of your contracts, basically sell half of your investment to make your money back. So you can hold the other contract basically for free because you've already taken profits off of the table. And what you can do is you can wait and see what happens to it. You don't really care. You're already taking profits off the table. So you can hold it. And in this case, in Palantir, it runs up even more. So what do you do when it hits $43? You still don't know what's going to happen. You can take profits again since that contract is up a lot, or you can continue holding. But in this case, holding, you would have lost value on that contract, but eventually it did recover. So it really wasn't that big of a deal. But generally, I like to take profits when I see it. I don't get greedy. The plan here is to take small, consistent profits with options because we know buying calls and puts, they are super risky. So I like to get in and out quickly. Now let's say another example. You buy in around this level, 30, let's say 36, and it starts to run up. It's not enough increase to take profits on, and so you continue to hold, and then it starts dipping. So what would I do? I like to cut losses pretty quickly because as we can see later on in the week, it does dip even more. So if we did hold, we would have lost a ton of money just because buying and selling or buying calls and puts are super risky. They're leveraged investment. I don't like to hold them for a while unless I have what's called a leap. And a leap is basically a call or put that's has an expiration date at least a year out. And I used to use these leaps pretty often in my portfolio, but they recently gone up 200-300%, and I was happy with the profit, so I sold for realized gains at that level. Now, if you are a long-term investor, you're just holding shares, of course, just continue holding. And if you don't want to invest in the stock anymore, of course, sell it for a different company. You also have to consider what these companies are. So if it's, say, Apple or Microsoft, these are great companies for the long term. And as you can see, generally they go up in value. You do have these small dips, but eventually they recover because companies like Apple, they have positive revenue. They're always innovating, and they're always bringing new stuff to the table. I think that's about it. If this helped you at all, please leave a like. If you still have any questions on when to sell an investment, obviously short term, you want to get in and out quickly. Long term, try not to look at your portfolio because eventually, good companies like this, they go up. All right, thanks for watching.